No,
but I
I'll do a webinar on it. It's okay.
no, but it won't. Sometimes it doesn't happen. If you're gonna show me something and I want to learn it, I won't remember it unless we record it. So I started recording, and then we can turn it off when
Okay.
I start talking shit.
So look, you got. Let's call up. Let's call up. Let's do a better
I
picture than
say
that.
that again. So you drew
Okay.
the the trend line through the B correction, the
The whole
esoteric.
the whole thing about this is that whenever you have chaos in the market,
Yeah,
you must recognize the chaos and go
yeah,
up or go down a time frame to find order.
yeah.
Now, I am using the terminologies here that I said in the terms of market trading. If you talk about chaos and order to an academic or someone in nonlinear physics, they're going to change the meaning of those words to mean something else, and it's not going to make sense. But what I am telling you loud and clear is that there is a magic point in the correction that Elliott Wave theory does not recognize. That's what I'm saying. Now, when you start looking at that magic point in the correction, and if this was a corrective wave up to wave 5, 1, 2, 3, 4, 5, if that's a corrective 5 rather than, and it is, because you see the way that overlaps that, as I
Hmm.
drew it as a corrective, semi-corrective. There's no gap. The corrections overlap. Well, if that was a corrective wave 5, and I said, can I find a measuring wave somewhere in here? I'd say, there's the middle bit. Now, what can I do with the middle bit? I've got this. I've got this. Maybe I'll be working with this. And now what I'll do is I'll sort of say, okay, if I go through there, does that mean that no, it doesn't work. Oh, wait a second. And all of a sudden I'm in business. The market has to tell me though. I just recognize that there's something that Elliott Wave theory does not talk about. And I'm saying that in the B wave of the B wave of the B wave, or the X wave of the ABC X ABC, there is something that is relative to the higher picture, the higher scale, time scale, the higher scale fractal. And if you start drawing big trend lines and looking at price levels, it pays to pay attention to the price that comes out of the middle of a correction and or the time that that price is generated in the middle of a correction. And what the middle of a correction is a very subjective thing. Like Elliott Wave, you'll just get better at it by doing it. But
Okay.
believe you me, Elliott Wave doesn't cover all the bounds. And if you don't do cycles, you'll never realize that the midpoint is as important as the endpoint.
Yeah.
But if you do cycles and you climb above the level of mediocrity, which is where most people who do cycles stop, then you realize that cycles are fuzzy because, you know, the fuzziness hasn't been dealt with. It's a bit like walking up to a professional golfer and say, how do you hit it? Well, I hit it. No, no, no. I mean, I've been watching it. How do you hit it just so? You understand there's a different kind of a question. At that point, he looks you in the eyes and he goes, you really want to know? Okay, let's go back for kind of 5 drinks in the pub and we'll sort of spend 3 hours talking about this. So like most people don't want to get involved. But as I say, you know, let's say you took, let's take some real market charts. All right, so let's just put up a random
But
market.
let me ask you a question before you take that away.
Yeah?
All right. So you started to answer the question that I was couldn't figure out. So he's got this weird pattern with 23 waves.
Yeah.
And then what? So what? I mean, so then I'm thinking to myself, well, no one's ever done this on a junior mine. So I'm thinking I'm nuts. All right. And then I'm thinking this has to be some kind of universal pattern, and it has to be some kind of wave thing off of Elliott wave. So you show me one, two, three, four, and then
Okay.
you write three again.
Let
Okay.
me let me explain that we're talking about Lindsay's pattern only here, all right? That's
Right.
all I'm talking about. Right. So I'm going to have to look in my hard drive just for a second to see if I can find a picture. Okay, I'll just find it off the internet. Right, so 3PDH. Let's just do a quick search.
Oh Lord.
All right, so here we go. I've got it. And usually there's a couple of charts that are mine on the internet when I search for images.
All right.
I'm the one that sort of took this a little bit further.
Yeah. And I'll just for the future, there's the chart that I painted for Stoneland, whatever his name is, Stonehenge.
If Stonehenge wants to stone,
I don't remember his name. So I can't. If people use different names, I don't know who they are.
It's not my place to kind of like. Okay, so what am I looking for?
You can call me Green Laddie. It's fine.
Okay, so here we go. So that's the Lindsay 3 Peaks and Dome House pattern. You good?
No, we have black screen.
Oh, okay, right. Put it into the. Okay, so dumping it into the Windows page that I have.
There we go.
Okay.
Yeah. Yeah.
Okay. So that's the George Lindsay pattern. 3 Peaks and Dome House. Okay.
Yeah.
I want you to just go wave 3.
Yeah.
Wave 4. 1, 2, 3, 4, 5. Wave 5. Right. So
yeah.
Let me just put an Elliott Wave count on this.
Yeah, that would be good.
So I'm going to do it in red. I'm going to wipe it off, and then I'm going to show you something else about this. So
all right.
There's wave 3.
Yeah.
Okay. Here's wave 3.
Yeah.
Here's little wave 4. So that's wave 5 of wave 3. Fair enough? Then wave 4 gets in, and you go A, B, C,
okay,
D,
all right,
and E.
Okay.
Now you go wave 1 of wave 5, A, B, C, which is wave 2 of wave 5. And then you go wave 3 of wave 5. I should be in small numerals. Okay. Wave 4 of wave 5. And wave 5 of wave 5. Sorry, wave 5 of wave. This is all wave 3. So that's wave 3.
All right.
Okay. And then you go 4. Because it's all an ABC will be followed by a sharp. A shallow will be followed by a sharp. And then you get into wave 5, and it's 1, 2, 3, 4, 5, which is big 5. So what you're looking at is the second half of the uptrend of an impulsive pattern. Now, let's take all that, right there, and let's do this. Now what I'm going to do here is I'm going to rotate that 180, all right?
Yeah.
You get it now?
Yep. 1, 2, 3, 4. I get it now.
Now, check in each case the impulsive wave. Check wave 1. It starts with a shallow wave 2, and then it has a rectangular wave 4. Check the impulse wave of wave 3.
Okay.
It has a first wave up, then it has a wave down, then it has a second wave up and a wave down. It had two wave 2s. It has a big 2 followed by a little 2. That's how wave 3 expands. And in actual fact, I should have put the big 3 there.
Okay.
Because that's little 3, if you know what I mean. So it shows you an expanding wave 3, it shows you a wave 1, it shows you a wave 2, it shows you kind of a rectangular wave 4. So what the Lindsay pattern is, the Lindsay pattern is the fractal of the Elliott waves, and the subwaves are included.
Okay.
Where's the point of failure for most Lindsay patterns? Well, the domed house doesn't happen, that's what. So you get your 3 peaks, 1, 2, 3, and then the market does something different. And what the market does different is it kind of goes up like that, and then it goes boom, right? And the reason was, this was actually A, this was actually B, and this was actually C, and you were too dumb to figure that out, or the market was too smart, and that was the top of down you go. Now, I'd like you to think back to gold in 2011 and 2012.
Okay.
I'd like you to look at Bitcoin over the last month.
All right.
Where was the break in the fractal that stopped this being what was here before I added this break? The break in the fractal is there, then that not going higher, then that being taken out, and there's the trap. Boom. If you're on the wrong side of that day, woe betide you. You're not going to have much of a chance because it will probably do it on the open the following morning. And that is why, folks, when you look at a market, wave 1 is fast. Now they say wave 3 always extends, but wave 3 only extends because it comes from way down here in wave 2. But if you look at a real market curve, it looks like that. How can a real market curve look like that when there's 5 Elliott waves in it? That looks like an A and a B and a C, doesn't it? Well, the reason it looks like that is the same reason that a cycle looks like that. And now let me explain. All the action is in the first few moments and the last few moments of the huge time between these points. This here, right? Invert that at that point, and it becomes this.
Yeah.
Where's the fractal breaking? The fractal breakpoint is there, folks. It goes from one fractal, and all the people that are saying, oh, in 1947 the market, oh, my computer came up with kind of in 1920, on the hourly chart in kind of 1979, it did exactly what it's doing now. Yeah, that's because there's Elliott waves, mate. It does the same thing again, kind of, sort of, in different time frames. But believe you me, if you're not in for the first few moments, half the profit's gone. And the question comes, if there's so much in that bit there, that's the safe bit. Here's the risky bit. Because what it doesn't show you is that move there is kaboom, and then it goes up and starts doing things. The first few moments, if you take the time of the trend, missing the early moments or the final moments can be disastrous to your overall performance. And that creates a problem. And quite simply,
Whoop. There goes the sound. There. All right. We're back.
Okay, that was weird. All right. So here's your problem specifically. The market went up. The market went up.
You talking about Ivanhoe now?
I want to be a bull. All right. Okay. We're talking. I want to be a bull. The market came down.
Yeah.
Now, okay. So I want you to tell me where's the buying point. We want to be a bull. Is the buying point here?
Well,
Is
I
the
don't
buying
buy.
point,
I'm not
is the
gonna
buying
buy
point
there.
down there?
All right.
Is the buying point here on the breakout? Is the buying point the halfway point? Or is the buying point just a tiny bit above that? Where is the
Yeah.
buying point?
Yeah. That's good. I'd buy there.
We want to take a vote. A lot of people would say buy the breakout because
Yeah.
it has to be going up if it's making new highs. Well, let me explain the answer. The answer is there's the buying point,
Right.
provided it doesn't get to there. And if you buy there and it gets to there, you should be saying good night, I'm out.
Yeah.
Okay. So why? Because you're getting the maximum run. You get in the trading range, and if it goes further, well, that's gravy. If you get in the trading range, and you're willing to say, I might not take the trading range, I might go for something more. Okay, if my bullish case is real. So there it is. Now, how the hell do you buy down there at low risk? Well, you use your Elliott Wave knowledge. Because on the way down, that thing is doing A, B, C. 1, 2, 3, 4, 5. And if that was right, the C looks like it is 1, 2, 3, 4, 5. And you're going, okay, here's the fractals. There's A, there's B, and here's C. Taking out wave 4 is bullish. Boom, I'm buying. But what about wave 4 of wave 4? I'm buying. What about wave 4 of wave 4 of wave 4? I'm buying. And with the minimum distance between me and my stop.
Yeah.
Maximum gain, possible. Minimum risk, possible. You can't even see the downside compared to the upside. And that's what it's about. If you know Elliott Wave, you understand the principle.
Right.
But if you understand the way the way the corrections work, you can start to turn those cycles and those Elliott Waves into a different level of understanding. Now, what was the wave for? What was the wave for? The wave for magnified, looking in here carefully, right? It looks
Yeah.
like 1, 2, 3, 4, 5. Fair enough? Just
Yeah.
like the bigger version. Okay, so what was the wave for? Well, the wave 4 of the wave 4 of the wave 4 had a little A, a little B, a little C. Stop wasn't there. The stop was there.
Whoops. No sound.
Sound gone.
You're back. You're back. You're back.
Okay. So anyway, the whole point is to figure out what's going on in your wave fours, to find out your trading ranges, understand the difference in trading ranges and trends, and say, okay, how can I trade in it? Because it's all range trading. The thing is, when it expands out of the range, if you can get those trades, the better. So which is the least risky of all these? Let's say that's our trading range. Up we go, down we go, up we go, down we go again, and up we go. Which was the safest one to buy on? The last one. The longer you wait, the more
Yeah.
likely it is something's going to happen.
Okay.
Problem with that is safety comes at a price. In this case, it's opportunity cost. The longer you wait, the more chance there is you'll miss it. So it's the old story, and you're all everyone, me, you, everybody, anyone that touched the market knows this. The fear of missing out. You know, it's freaking terrible. It's like a noose around your neck. And you don't want to miss out. You don't want to miss that trend. Yeah, so what do? You buy too early. Damn, crap, there goes another of my knuckles. I just had the hammer on my knuckles. Yeah. Market still has the hammer and my hand is still clamped to the table. I'll try again. I'm so brave. You know, we all do it. Like, we're all that stupid, we're all that naive, and we're all that hopeful. But anyway, says, wait till the third one. Or the fifth one.
1, 2, 3.
How many counter swings are there in the average trading range? Did you ever count? Did you ever call up 100 trading range and you start writing down this one, this one, this one, go to another market, that one, that one? How many counter swings are there in the average trading range? Well, any
How,
wave theory is built around it. It's ABC, ABCDE, and ABCXABC. That's kind of like 9 out of 10. Now the trouble is you can't tell what scale they are, because sometimes it's a tiny 3, sometimes it's a big 3, and okay, so it does all that stuff. And when you really get lost, go back to looking for the wave 4 or the previous trend. Because if you can't get the counter swing, and you can't get the swing, if it looks chaotic, move up and look at it again. So looking at it from the higher level, there's a reason why I zoom out to quarterly and annual and monthly charts, just like, it's like nothing to me. And I'm no doubt that many of you are cringing inside and hitting your heart, oh, there he goes again. Every time you can't make sense of it on your little micro frame, it's because it's not your market doing what you want it to do. It's doing what it wants to do.
yeah.
Right? So I just try to stand back and see whatever it might be trying to do. And you're in too close if you can't see it. That doesn't mean that pulling out will make you see it, but at least you'll have done what is normally necessary to make it possible to see it by moving out. Move out at least 1.618 of the time frame, preferably 2.618 or 4.236 longer period. And if you went to, say, you know, from weekly, if you go from daily to monthly, there's 22. No, take it from weekly to monthly. There's 4.3 weeks in a month. So that is going from weekly charts to monthly charts is a 4.236. It's a 3x golden ratio, pi cubed, of a move up in scale. So you're try and show me the trader that tried 2.6 week charts. But try and show me one. There is a time frame in there that no one's trading, but someone's probably trading it. But if I started into that, no one would want to look at the stuff I do. Anyway, watch the takeout of the wave 4. That's where the magic is. And after that, take out of the wave 2. Why is the magic of the takeout of the wave 2? Because you take out the wave 4, holy crap, if he gets through this level, he gets to fight the champ. Boom! Oh, we have a new champ. That's the way it works. So, promotion. Right. So, let's just get this right, okay?
Okay.
Let me get this right. Here's your wave down. Here's your wave down in the move. Okay. We'll assume it's 5 waves down. All right. So 2, 3, 4, 5. Could have been an A, B, C, D, E. I don't care. Right. Here's wave 4. I want to know when it gets through those levels. Fair enough. Okay.
Yeah.
Well, we're assuming that that's the move up leading to that. Now here's the thing. If I get through there, in comes everyone else. Instantly the market takes their positions out.
Okay, that's good.
Right? So you get your wave 2 in whatever form it can, and then it goes up again. And bonds are just like this to a textbook. Okay, so off you go again, and now we're in the fairground, and the champ is looking for a fight. And there's wave 2. Okay, and you don't get to fight the champ unless you take out the second contender. Boom! Right, I did it. Hey, I'm the new champ. Instantly everyone buys the breakout. What happens? A, B, C. And off we go again.
That's good.
That's markets. And what are we doing here, David? We're looking at pullback, which has a B wave probably in it, okay, which is probably a little balance point. And we're looking at what is this thing? This thing here is the higher low that makes that the low. Okay? So when this happens, that happens and gets promoted twice as much. Now, let's look at it the other way. When you get through here, over here, boom, you went through it. Okay, now you're through it, okay? Now you get to fight this guy. Why? Because you just got promoted. Your swing from here just got promoted. It's a serious swing. This thing could do it. And when you get through there, you did it. But now you're making a new high and everyone knows that. So they all pile in, they all get cleaned. Unless it's a wave 3, in this case they don't get hit as hard. So the the consolidations, okay, there's a consolidation getting taken out. Here's a consolidation getting taken out. Here's a consolidation after you took it out. Here's the point. The consolidations are giving you information about the trend. Do you see it? It's the consolidations that are telling you what the trend is. Because if you have a trend going down to the bottom, if you have a trend that goes up and the next move goes down a bit lower, well, what was the problem? The problem with the consolidation was 2D. Take that exact same trend and make the consolidation smaller, and it looks like that. Oh, that's a bull market. Why? So it's about the consolidations, not about these bits. These bits are what comes along when you manage these bits properly. So, yeah, like, do you understand what I'm saying?
Yep.
Okay. So
good shit. Good stuff, Norman. That's
now,
good stuff.
Here's the whole point about time frame and scale. On an Elliott Wave basis, let's change the color. That trend there is bigger scale than these consolidations here, because they're small 1, small 2, small 3, small 4, small 5 equals big 1, right? So these little guys are informing you of this big guy. The consolidations are categorizing and promoting the next higher scale. And what's the purpose of trading? To catch the big move by entering and exiting on the small move.
Yeah.
So minimize your risk. Well, the risk management is all bound up in this. It's all tied up in this. And okay, so I hope I explained it clearly enough. Because
that's good. That's a lot of good stuff there. A lot of good stuff.
Anyway, so let's see. I should stop sharing screen at this point.
Okay.
And, so there you go. Like, I mean,
I'll turn on my camera. Not so. Let's see. Do I have a camera?
Okay. Yeah. See you there. Who have we still? Have we lost a few people?
Yeah, I think Kerry got smart because he could read my mind. He figured out that I was gonna make you guys talk.
Where'd he go?
And he suddenly lost connection. That's happened before.
He lost his connection too, did he?
I was just gonna play kalimba. I just was gonna ask for. Yeah, does anybody else here have a kalimba, a finger piano from Africa?
No, I never used one.
You don't have one?
No.
I have a didgeridoo, but no.
You do have a didgeridoo?
A little tiny one, yes.
Yeah, we got a harp.
Play it.
We got a
I'm learning
slowly.
That's a good instrument. I had a didgeridoo and I immediately said I'm not gonna play this thing. that's too. And I play lots of wind instruments. That's one I'm not gonna ever play. It's too much.
We're a bit used in this family.
Anyway, Norman, that's good. That's really good stuff. So, which brings me back to the question. So, what do you guys want? And that's when Kerry hit the